BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's get stuck in then, shall we, with the FOMC final meeting today. So we should get some clarifications to what the Fed want to do. As far as I can tell, whether it's 0.25 or a pause, it's going to have the same effect, which is a bit of volatility at the moment, on the very moment that it happened, and then continuation of the trend that everything's in at the moment. So that would be a current trend for Bitcoin towards the upside, to reach areas like 28,400 and beyond. Sounds crazy, I know. I hear a lot of people being bearish, and look, there's always a reason to be bearish. But based on the 4-hourly and the daily, which is the higher term time frames, the trend is still pretty sweet, to be fair. There's nothing much more to say about it than that. If you really wanted to go over the bears case, it would be the shorter term time frame has given us bearish divergence, 1, 2, 3 drives of that on the 1-hourly, and obviously all the way up to the 4-hourly has got that as well. So two drives of bearish divergence, not a third. The third drive is usually the kicker if you're going to get it at all. And the 12-hourly is pretty sweet. Plenty of resistance at this exact area on the 12 hours. The 12 hours has actually been pretty good to look at now historically, looking back at it. 200 exponential death cross retest, kapow, and then 1, 2, 3 in a row rejections on that 200 exponential. So arguably, once that breaks and gets closed above on the 12-hourly, should really be plain sailing straight up to obviously 28,500, and then I honestly think we're moving up to 30,000 after that. So yeah, as far as taking positions is concerned today, someone on the Patreon was playing it extra clever, which is to hedge your positions with tight stop losses, so going long and short on a variety of different cryptos and stuff. That's one way to do it. Alternatively, for me at least, I'm still in only one derivatives trade at the moment, which is my Atom long, and that's from a very decent entry point. Other than that, just leave it be. The crypto's good for spot trading, obviously, especially when things look relatively bullish to the upside. Why wouldn't you have a little position here and there in some of the lower cap coins, which I think will be dragged up with the market if Bitcoin moves. I don't think there's alt season quite yet, but I think they'll be dragged up significantly, to be honest with you, and then probably fade, because the dominance chart is still bullish. It's broken out of a descending triangle. We should expect only bullish things from it. Let's have a look at the Dixie, still pulling back from that major area of resistance. Probably going to fanny around between the 10 exponential and that resistance, so quite a tight range, looking for it to break one way or another. My preference is that it does come down before another big move back up again, back up to the resistance, so I'll be looking for it to come down to as much as 103.4, basically that retesting that golden cross on either the exponentials or a little lower on the simple moving averages, but not go any lower than 103. If it does go lower than 103, then it's party time for everybody. Lots of talk in what do you want to call it, traditional land, about whether or not we're going to see proper recession in the States, if there's going to be a soft or a hard landing. Look, there's no reason, as far as I can see right now, to assume anything other than a soft landing for inflation. And you know, the economy and the stocks, for instance, generally are doing very, very, very well. In fact, if we just zoom out, we can see the S&P trending quite close to its all-time highs, you know, which, as far as I can see, is relatively impressive, although it's not surprising, because I did call the bottom and I did buy a hell of a lot here on the retest, and the rest is history. So the only other thing that we have to really think about is oil, which is now pulling back from just ever so slightly below the area, the 93. It's pulled back at 92.72. Fine, let it pull back. This again, similar to the Dixie, is a bullish chart, so a pullback on this is likely to get bought back up, and if you're going to get a buyback, it's going to be around the 83, 84, and then a bounce probably back up to 93. So there's a lot of range-bound stuff going on in Forex and commodities, oil basically. Gold looks good to me, a breakout and probably a continuation up towards probably 1975, thereabouts. So everything's still exactly as expected. No reason to move outside of my overall analysis, which is that Bitcoin, at least, which is the main component to all this trading that I do, is likely, very likely to move up towards 30,000 and maybe even a bit higher, but definitely 30,000 to begin with, and see where we go from there. Right. Stay tuned on the FOMC. We'll see what he has to say, see what they want to do. Either way, I think the market's priced it in anyway, and we'll just have a look to see if that's the case. If the market has priced it in, it was in the form of that Dixie rejection, move up to the resistance and then rejection, and so that's likely to come down, and everybody else should enjoy some upside. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.